April 19th, 2024. My big thought today was that we were going to end up getting some sort of attempt to test 5,000. And a lot of times when you have, a really important big round numbers are psychological support. Not, they're psychological, but they're very real. And a lot of times when you have a magnet, especially as important as 5,000, the market will get close to it and then not quite touch it. And then it'll touch it later. And so that's one of the reasons why you can think this reversal up is probably going to be minor and might not last all that long, is because we weren't quite able to touch 5,000. And it would be really unusual for us to get this close to that kind of magnet that's that important that we haven't touched in, I don't know, 5,000. The last time we were out there was here. So it's been, roughly a month and a half since we've been there. It would be pretty unusual for us to not test that. So with that being said, we did get a measured move down of this wedge today. 1, 2, 3, and we got a measured move down. And that was around the low of the day. But I thought that the more important thing down here was to test a 5,000. Also, if you hear whirring in the middle of the video at any point, one of my fan's computer, my computer's fan, one of them is really just on the fritz. And I ordered a new one, but I don't know when the replacement's coming. It probably won't be for at least a couple days. So over the next couple days, if you hear it whirring during the video, it might get kind of loud, and I apologize for that. But I think it's just going to be the fan. Anyways, bar one, basically big doji bar. We're in the middle of this trading range from yesterday. I'm going to change the study to that. We're in the middle of this trading range from yesterday, so I don't personally really want to trade. I think that it was unusual for this trading range to go on as long as it did. And if you're in the middle of a trading range, you could stay in the middle of the trading range for a lot longer than you think you can. So for me personally, I was, waiting to trade a breakout of this trading range to the downside or the upside. I thought the downside was more likely because on the daily chart, it's pretty climactic and we have a lot of good bear bars. And again, at this point, I think we're probably just going to go touch 5,000. Bar two, big tail on the bottom of 1 and 2. So an inside bar, potentially a double bottom, and then a bull surprise up on bar 3. Bar 3 is a buy climax. It's towards the top of the trading range, not really that good. Probably better to buy below a bar like bar 3 than it is to buy above it. And you can see that's what happened during bar 5. So whenever you get those climactic bars in trading ranges, oftentimes they end up trying to suck you in at the top, but they're a lot better to just buy below rather than above, or just don't trade it. Bar 4, a reversal down. You can take a short like bar 4. The problem is you're selling in the middle of a trading range on a flat moving average, but if you sell it, maybe 30 or 40% chance it's the high of the day. Probably like 30% chance the high of the day. Definitely not more than 40, I would say, but I would say probably somewhere in the 30% range that's just the high of the day, and we can continue down in some aspect all day. And it wasn't unreasonable, I think, especially with the fact that 5,000 was a magnet below. So you're trying to make you're risking 10 points trying to make roughly 50. So pretty good risk reward. You only need to be right 20% of the time in order for that risking 10 points to make 50 to break even. And so if you're right 30% of the time, you make money. Bar 5, I think if you sold below 4, you're not getting out on 5. Bar 3 was, a big enough bar that we might get a second reversal up, and it's a trading range. So what happens in trading ranges? The highs and lows of these bars get tested. So some traders, they bought above 3, a small position, knowing it was probably going to go against them, hoping that we were going to get an upside breakout. But instead, they scaled in more below 3, and then when it got to their initial entry price above the high of 3, that's where we ended up getting these sellers again. So you can see that's what ends up happening here. I wouldn't buy above 5. It's a tight trading range. And you were still on the sell from 4. 6, a bear bar, but a big tail. I think any bulls who are long for any reason are looking to get out now. And 7, outside down, but really not very strong. I'd rather wait. And an inside bar on bar 8, you could argue some sort of IOI. And there's a theoretical sell below 8. We're still on the sell from 4. So, it's okay to be short, but I personally would just rather wait for something strong. Follow through on bar 9, but a tail on the bottom. So maybe not quite as strong as it could be. And then you get more follow through on 10. And I think 10 is the most credible sell on so far on the day. It's a breakout with follow through, and it's possible we started to move down to 5,000. Sometimes when you have an obvious magnet like that, the market just keeps trapping traders out, and you can see the whole way down it kept trying to trap you out of the trade. But follow through on 12, and now we have 3 straight bear bars. It's okay to be short, okay sell to close, we have follow through on 11, okay to be short, okay sell to close, but then disappointment on 12. So I think that bears are going to exit above 12. It's kind of, surprising. I think bar 12, if you sold below 10, you don't really like how much 11 overlaps bar 10, but it's still okay to be short. And, 12 is a second reversal up if you think about it. We have a big tail on bar 11, which means the market went up on bar 11 and then back down on bar 11. And now it's going up again on bar 12. So it's a second reversal attempt up on 12. So bears are definitely going to exit above 12. Is 12 probably a minor reversal? Yeah, probably. But I think that if you're buying above 12, you probably have to have a wide stop and be willing to scale in. And you're probably not going to you're probably just not going to make very much money. But I wouldn't hold short because this can be a pretty deep pullback and difficult to sit through. 13, a doji bar, relatively expected. Bad follow through for the bulls, bad follow through for the bears. And then 14, a bear bar, but a tail on the bottom. 12 might be strong enough to warrant a second leg up. So kind of hard to be short here. I think once you see the close of 14, maybe it's okay to sell below 14, but it's probably better to just wait for follow through. 15, a big bull bar closing near its high. And 14 did something important. You can see 14 traded below 12. So the traders who had a stop one tick below 12 got stopped out during 14, and then the market reversed up. What does that mean? What's the key to breakouts, right? Trap traders are the key to breakouts. So 15 traps out the bears, traps out the bulls who bought traps out the bulls who bought above 12 and had a stop below 12. And when you're in a trend, it's okay to sell breakouts. So for example, we're in some sort of bear trend here, just as a reasonable example, and we get this pullback and you could sell the breakout below 37 as it trades below it during 38. And some bears see this as a bear trend and they want to get good follow through. And so some of them sell the breakout and then, you get trapped on 15. So now you have bears, if you sold the breakout, you hate 15 and you're really disappointed. And you have bulls who bought above 12 thinking we were going to rally. And now they got trapped out. And now they're thinking, oh my God, the trade's going to go without me. So you have a lot of trap traders. So I thought 12 was a reasonable buy. My only problem with 12 was that, I thought that I'm a little tired. I've been working a lot lately. So I'm messing up a lot of bar numbers and I'm sure I'm going to continue to do so. So I apologize in advance. 15, I thought was an okay buy, taking a chance that we've seen the low of the day. But my big problem with it is that it's a big bar with big risk. And if you do buy above 15, you're probably not all that thrilled with 16. You probably wanted to see a better bar. 17, I think same problem. It's not really all that thrilling. It's okay to be long, but this just looks like, a spike 15 in a weak channel 16, 17. So we might start a trading range, which we do on 18. 18 is a low one, or triggers the low one short below 17, but after 3 straight bull bars, probably a minor reversal. You could argue that the spike down to bar 11 needed a 2-legged correction, and 12 is the first leg, and 15 through 17 is the second leg. So bears are wanting trend resumption. You could also look at 17 is big low too from 13, and now we have 17. That's probably a more correct way to look at it, but it's still a bull bar regardless, not a great sell. Bear bar, closing near its midpoint, 18. I'm not selling 18. I want more follow through. We get some follow through 19, but it's not as good as it could be. And then 20 is a reversal up, but I'm not buying it. It's right on the moving average. For me, I think that at this point, if we're going to get a rally, it's going to be rather surprising and rather obvious. So I think, rather than buy 20, just wait and see if 21 is a big bull bar. If it is, then great. You can buy and, hope that we race to the upside. But it's really not all that great. Something to note, we've been in a bear channel. We've been in a broad bear channel for a while now, but really, the bear channel, I would say we had the spike here and then the bear channel started here. So we've been in a channel for 350-ish bars. And that's kind of unusual. Usually when you get a channel on the 5-minute chart, a bit like a broad channel that lasts a couple of days, it'll last, 2 to 3 days, and it'll be about 200 bars if you get a really long channel. That's usually like the upper limit of what happens. But obviously, it's the stock market, and anything can happen. So, sometimes they will go on for longer, but generally channels last about 2 or 3 days, and have roughly 200 bars. Bar 21 is an okay short. It's a low. I looked at it as more of a low 2. If you wanted to, I don't think it's wrong to look at it as a low 3. So, 12, 13. So 13 the low 1, 17 the low 2, and 21 the low 3. I just looked at 15 through 17 as strong enough to reset that. So I thought 21 lower high, double top, low 2 short. So reasonable to take a chance or wait for follow through when you get it. 22, cool. Sell below 22 for a swing. Follow through 23, and then disappointment 24. I think bears will probably exit above 24. I thought if we were going to get the downside breakout, it would kind of just start to go. But instead, we got disappointment 24. 25, A bear bar closing somewhat or closing pretty near its low, it's probably okay to sell below. But you definitely might be disappointed sometimes. It's just a swing sell, like a lot of these trades, and you're risking 6-7 points trying to get down to around 5,000. So your risk reward is really good. Whenever that's the case, your probability is going to be relatively low. You can see what are traders selling. They're selling the moving average. They're selling 6, they're selling 8, they're selling 18, they're selling 21. So traders are selling closer to the moving average in general today. So better to look for reversals down from the moving average. Surprise 26, failed breakout below the 18 bar range and a bull bar closing near its high 26. I don't think it's wrong to buy 26 and just, put a stop below and hope that this is the low of the day, basically. I don't have a huge problem with that. My only problem, I don't have a problem with it, but my only problem with it, it's kind of funny to say that, but that is trading. Everything has a problem. So you can take that trade, but there's a problem with every trade because there always has to be two sides to every trade, right? But I think the issue that I have with 26 is that it's in a tight trading range, 24, 25, 26. But one of the good things 26 has going for it is look at all the bull bars we're collecting. This is a really important concept. So look at all the bull bars we're collecting so far today. Look at 12, look at 15, look at 20, and now look at 26, right? We wouldn't be getting bars that are this strong if this is just going to be a massive bear trend day. It'd be really unusual for us to be getting bars that are this strong. So my thought was, it was reasonable to be long anywhere in here, really. There was a valid argument for being long because of how strong these bull bars were. So I thought even if we sold off and tested 5,000, that we were probably going to try and test somewhere back in here. It's more vague, I think, in the sense of somewhere back in here. I don't really know exactly where. Maybe the midpoint is a good place to start, something like this. But just in general, I thought we were going to test somewhere back in here. I thought we might even test the close of bar 20 since there's a big bull bar and a theoretically reasonable buy. But you can see the bulls who bought the close of this were disappointed in this, and they sold out on 21 instead of buying more. But I thought we might test somewhere up into this area, and we did. And then once we tested up into this area, you got to be thinking, once we started to get a reversal down 54, 55, we're going to 5,000. Pretty obvious. So 27, doji follow through, but sometimes you're going to get bad follow through taking a trade like 26. 28, a big tail on the top. Okay to be long, but I think really disappointing that we didn't get a rally up through the moving average. And then 29, a bear bar closing near its low. Bulls will exit longs, and bears probably one of the better trades of the day, selling below 29. It's a low 2 at the moving average, and traders have been selling the moving average all day. So maybe now we start the sell off. Follow through selling 30, then a big doji bar 31. Usually means the sell to close rally is coming to a finish, but there wasn't much of a sell to close rally. This could be a trading range, but maybe we get a vacuum test down. 32, a bear bar, but a tail on the bottom. And, the question starts to become, when are we going to go and test 5,000? And then you can see 33, when it started to sell off, it just started to get really big because there was a lot of edge, right? Traders still had really good risk reward of us getting all the way down there, and the probability was starting to increase. So a lot of traders sold the market, and that's what made 33 get so big, because the risk reward was really good and the probability was decent. So it moved quickly. And then you can see as the trade moved, the risk reward got worse. The probability got better, but the risk reward got worse. So that's why you started to get a little bit more of lackadaisical selling, 34, 35, 36, because we're within, 5, 6, 7 points of the magnet, and you have to risk like 10, 12 points, probably at least a stop above 33. For me personally, once I saw 34, I just put a stop above 34. I wanted to see some sort of, dip down to the moving average, but we just never really quite got it. And this seemed like, think of 33 as a spike, and this is a weak channel. We're probably going to form a trading range soon. So you want to be really fast to get out somewhere in here. And ideally, you could argue this is the channel line. We're trying to get a breakout below it. But the thing is, once you start to get this move, so everyone, you can see there's a tail on 34, hold on a second. This is something I definitely want to go over. So hold on. You can see there's a tail on 34, a tail on 35, a tail on 36. Why? Because, traders don't want to sell down here. They were selling pullbacks to the moving average here. And so while this bar is rallying, a lot of traders, I think, have a stop above 34 at this point because this is too much risk. And this is more of a on the trading side than the chart reading side. But I think a lot of traders are really quick to get out if we start to rally here. So when we start to get a rally here, what they'll do is they'll sell and put a stop above 34, and they're only risking, 2, 3 points, and they're trying to make 10, 12 points. So the risk reward is really good. and the probability is not awful. So that's why traders kept selling the rallies on 34, 35, and 36, specifically 35 and 36. And then 36 was the move that traders wanted, but it wasn't as big as they wanted. So traders wanted to get to the moving average, or to the magnet of 5,000, but we ended up getting, within 3 or 4 points of it. And sometimes when you've had this big of a move down and you get close enough, traders will just say close enough and they'll just exit, and that causes 37. I wouldn't sell 38. There's going to be buyers at 5,000 if we get there, and your risk is bigger than your reward, and you're selling a 3-bar tight trading range, 36, 37, 38. You can see traders use 38 to exit, and that's what caused a big rally on 39. You could probably buy above 39. For me personally, I stayed out of that, but I thought it was okay. You get follow through 40, 41, but a big tail 41. Inside bar 42. I think okay to be long, so probably okay to buy above 42, but you just have to be quick to get out. Follow through 43, but a big tail, and then inside bar 44. At this point, I think that you're getting ready to get out below pretty much any bear bar, or a couple points below any bull bar. You can see a 42, maybe the spike, 43, 44, maybe the channel. And we do test below the bottom of the channel, 46. In general, I thought we might get a lower high from 29 through 36. And so I thought, okay to be long up here, but rather dangerous. So you just have to be quick to get out. 42 was a possible 1-bar final flag. 44 a possible 1-bar final flag, and traders exit below 45. Outside up 46, testing the high of 31. And then a second reversal down 47. I meant to say 46, not 36. And second reversal down 47. Bulls will exit. And I don't think bears are going to sell that after so much strength. It's a minor reversal at best. Follow through 48, but still a minor reversal at best. We might have to test the 38 high since bears got trapped there and it was reasonable to sell. And this is not a bull trend. It's going to be a trading range, right? So if it was reasonable to sell above this bar and you got trapped, does this look like it's a big bull trend? No, it looks like a leg in a trading range, the same way this ended up being a leg in a trading range. Sorry. When I talk this much, my throat just gets dry. But we get an inside pattern on 49, 50, and 51. My point being, thinking that we might have to get back to the 38 high because this whole thing might be a couple legs in a trading range. And then you get 50, 52, a good bull bar. It's potentially a second leg trap within the trading range, right? So 39 to 46, bull surprise, and then second leg up, 52, 53. So potentially a second leg trap within the trading range, but I think still okay to buy 52 and be long. You can see it was a micro gap up 53, so some traders bought the close, but we ended up getting a surprise down 54. And when you get a surprise like 54, that makes this whole thing look like a second leg trap. And it's still, I still think we probably have to get back down to 5,000. And I think we still have to get to the 38 high, but 5,000 more importantly. And so that's why, I think it's reasonable to sell below 54, even after 51, 52, 53. You sell below 54, you want good follow through, you get it 55. Big, doji bar 56, an inside bar low 1, 57. It's potentially an expanding triangle, right? So here, and here. But, I'm not sure. I'm not sure that, I want to buy anywhere in here. I think that after this, it's too likely that we're going further down. And so 57, a low 1 short, I'd rather sit out. 58, a double bottom with 56, a lower low double bottom, but a tight trading range, 55 or 56, 57, 58. I would not take it. I think I said 58. I'm not sure. But anyways, 58, I would not buy 58. It's a tight trading range, and bad follow through 59, relatively expected. Not closing above the moving average. We might have to, when we get back to the 53 low, I think we will at some point. With next week, I would imagine. Maybe early. Sorry. Maybe early next week. And then big bear bar closing near its low 60. It's okay to sell 60, but the problem is you're selling, 60 got big, right? So you're risking, 12 points, and you're trying to get here, which is 6 points. So it's really not great risk reward. So what do traders do? They sell a pullback, maybe the 50% pullback. We didn't quite get there. We got close, and traders just sold the market during 61 around 50% pullback to get better risk reward, because now their risk reward, they're risking maybe 5 or 6 points trying to make 12 points. So it just flipped, right? they had to risk 12 points to make 6 points. Now they're risking 6 points to make 12 points. So the risk reward is a lot better. And the probability is not that much worse. And you get a surprise down 62 right to the magnet. Sometimes when you get a magnet like that, we'll go a little below it. So you get the follow through 62, 63, but I'm not selling down here. I wouldn't sell 62 or 63. I think too dangerous. You're too low. And we've hit 5,000. So all of the edge for the bears has been erased. And I think that we are now just going, or not all of it, but you get my point, is that that's what everybody was looking for. So we're probably going to oscillate around it. You can see we oscillated around it for the rest of the day. And I personally, once this happened, when we started to go sideways, I was not open to selling the rest of the day. If it started to sell off, I thought, just great, it can go without me. Even if we got some big self-close finish, it seemed very low probability. So I just decided I'd let it go. I was open to some sort of buy the close rally because we're relatively oversold on the daily chart at this point. I thought we might get some sort of buy the close rally, but you can see we just ended up going sideways, which was the most likely scenario. So if we had gotten, maybe in like some sort of reversal down, so we were in this tight trading range. If we got in a reversal down here, then a reversal up from down here, you can make the tight trading range work for you if you're buying very low in it. A bull reversal bar very low in a tight trading range, betting it's at least going to go back to the middle, and maybe you'll get lucky in a couple of good bull closes. But we oscillated around 5,000, which is pretty expected. I think that tomorrow being Monday, we might get some sort of rally. We touched the goal, which was 5,000. So I'm not sure how much is left to this. And again, looking at the monthly chart, even if this closes on its low, that's the weekly chart. Even if this closes on its low, it looks like a leg in a trading range. This is too strong for me to think that we're just going to sell straight off. The bears are doing a good job. They're doing a very good job. But I just think they let the market go way, way too far. I thought that there was 3 straight bear bars here, which was unusual. If you go back to my videos from around that time, you'll hear me talking about it. But so I didn't think this rally was going to go nearly as far as it did. I thought we were going to get disappointing follow through for this bar, but we ended up getting a bit of a rally. But we might eventually test back into here, but I think, we're probably going to get a bounce at some point first. I'll be interested to see if we keep the gap open with the high of basically around the high of 2021. So I'll be interested to see if we get back to this high, because we broke out above it to that new all-time high. It never pulled back, and it seemed like an important price. So we'll probably get back here at some point, I would imagine. And yeah, like I said, for Monday, I would be expecting some sort of rally, and maybe we'll test this magnet. If bulls are lucky, maybe we'll get all the way somewhere up here. I'm not exactly sure, but I think that sometime next week, there's going to be some sort of bounce. And so just be ready to trade that. But it is obviously sell to close on the daily chart. It's just very protracted. So if you're short, you have to be quicker to get out. And if you're, looking for reversals up, it's maybe a bit better next week. We did end up getting, like I said, it was like lower probability chance we just get a vacuum test of 5,000, but we got it. And we're at the moving average. We haven't been at the moving average in 24 bars. So I'm expecting buyers here. Do we get to a new high? I don't know. Maybe not. Probably a lower high from this, but I do expect some sort of bounce next week. I'd be surprised if we got a bear close next week. I think a bit more likely we get a bull close. For stop orders, I suppose, maybe 4 if you wanted to sit on your hands all day, which is fine. 10, 11 are fine. Maybe 15, but you got to find a way to get out. You can't just get stopped out. So you probably got to get out as 18's falling or something like that, or at the lowest below 18, I would imagine. And you can't buy again above 20. So you sell 21, 22, 23, maybe 25, maybe buy 26, sell 29, 30, maybe 33, but big. Maybe buy 39, 42, maybe buy 52. 53 is pretty high, but it is by the close. And then you can probably sell 54, maybe 55, and probably 60, but low. And yeah, that's it. So yeah,